Good afternoon and welcome to Bull Market Talk Show. Excuse me. Welcome to Bull Market Talk Show. This is your host, Rian Hobson, and we're doing actually the South African inequality problem today. One thing that I actually did notice for the last few weeks before now the Reserve Bank's interest rate decision this week is that everybody talks one direction, that the interest rates must not go up. Because the economy still needs support, whether it's in business and whether it's in people's personal incomes. Now, there's only one argument of the story. What about the other argument of the Reserve Bank or the interest rate decision? Does actually the low interest rates actually help with South Africa's structural problems? And that is the main thing. It is the inequality. We all know the problem in South Africa is that the inequality, whether it comes from the high unemployment, we all can say that the high unemployment is actually a huge problem when it comes to inequality. But does the low interest rates actually help to alleviate the problem of the high inequality and also the high unemployment? Now, that we will look at with some evidence after the break.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon and welcome back to Bull Market Talk Show. This is your host, Rian Hobson, and we're looking at the inequality situation in South Africa. And my main question is, does the low interest rates really help by actually reducing the unemployment, which could actually lead to a reduction in the inequality in South Africa? But before I go on with the show, please don't forget to subscribe to my YouTube page. Please drop your questions because it is an interesting topic for South Africans. And also like the show. And then lastly, there's a link below. Please click on it, register on markets.com for a free account. And also, please drop your comments. I would like to hear your comments and questions regarding today's topic. Now, very importantly, about the inequality problem in South Africa is that we assume with low interest rates that will actually create GDP growth. And with GDP growth, then you will get actually employment numbers actually to increase. Now, that is what we assume. But if we look at today and if we look specifically to the data of today, that doesn't work at all. And if you look across the world as well, there is absolutely no way or no evidence where it comes from where they say this side of the economy. For example, if you look at the unemployment rate, that is in black, and if you look at the annual growth rate, that is actually in blue, and if you look at interest rates, that is actually in yellow. Now, you can see that interest rates dropped severely, and then we had a sharp reversal of the GDP growth, which is in blue, and then also we have a sharp reversal in unemployment, or I will not say a reversal, but actually in unemployment where it actually shot up. Now, that comes now with low interest rates. Also, if you look further with low interest rates, this is actually the money supply of South Africa, money supply 1, M1, where the Reserve Bank pushed actually more liquidity into the market. Now, the money supply did increase quite drastically with the low interest rate. So that means there was quite a lot of money, or there still is quite a lot of money that was flushed into the South African economy to try and actually to create to boost the economy, or to create actually economic growth, which can also lead to actually to a reduction in unemployment. But the main thing is, does it actually work? That is the big question. Does actually the low interest rates help with creating jobs and also with unemployment. And we all know, we all can say that it doesn't work because the GDP figures, if I just can go back to it, the GDP figures, although it actually shot up, but that also comes from a low base, what happened last year with the pandemic. So, and the sad thing is the unemployment rate is keep on rising quarter over quarter. So definitely the low interest rates doesn't help at all. Now, what does the low interest rates actually create? Now, if we look at the interest rates and also South African debt to income, it actually increased since actually the pandemic, or with the low interest rates. There you see actually that the debt to income actually rose quite drastically up from where it was, which I can say here from 2018, it was at 71%, and now it's sitting at 77%. So obviously, people are actually basically buying stuff. People buy houses, cars, and maybe a luxury stuff because obviously the low interest rates can let you afford the house. But if you look at the unemployment number, which is skyrocketing high, we can look at the expanded definition of unemployment, where unemployment can be at about 45% or even higher, or if you look at youth unemployment, is sitting close to 80%. Now, the low interest rates only help a few people. And that is now the people that have still a job or has businesses or small businesses. That's it. Because obviously someone that is unemployed, if you go inside a bank, they will definitely not borrow you money because you don't have, one, you don't have a job, and two, obviously, you don't have the assets actually to work as surety for you to get the loan. So for me personally, if I look at the data, then it looked like the low interest rates is only helping people who has a job or who can actually afford to go to the bank with a good credit record and ask for money. So the vast majority of people, or basically half of the working population who is unemployed, is basically not benefiting at all. In fact, they get actually richer out of this because they can afford more products, for example, more houses, and then also they can buy expensive cars or even start a business. I can talk of myself in that perspective because I'm starting actually a project, or I did start a project, which was fairly expensive. And obviously with the low interest rates, I could take the advantage of it. But the main thing is also, when you look at everything and combine, when you have such low interest rates, that does not mean that people will actually borrow the money and start a factory, for example, which we need factories in South Africa. People or big businesses will rather use that money and buy machines or explore on other things because they have the capacity to explore. What we see now is that, I think it was Checkers, if I have it right, where they actually have the trolleys, and where you buy stuff, you scan the stuff, and there you go. So the low interest rates give big business the advantages actually to explore with new products, and that actually creates more unemployment because obviously they will not need to employ someone where they can just buy a machine. So capital goods actually do improve, or I would say there's a demand for capital goods, and that leads to obviously to more unemployment. And when the unemployment rate increases, that is where you will see actually more inequality that comes up. On the flip side of everything also, the low interest rates also does not necessarily mean the people that borrow money, that buy for expensive cars and those type of things, that doesn't mean the low interest help actually with your repayments. That is the whole thing. Good day, Regan. The low interest rates does not actually mean that it helps you to save money, because that is also one of the reasons of what I heard now before the interest rate decision of South Africa, which will be I think on Thursday. That is where they will have an interest rate decision. That doesn't mean actually that when you have low interest rates that you are basically saving money because you are not paying much for your mortgage. It doesn't. The low interest rates actually fuel other things. That is one. the government have the access to borrow money in this low interest rates environment. Now, when the government borrows money, that money goes, okay, in South Africa, it goes for corruption, but also there's a lot of money that goes into your social spending. That is social grants that comes in, more money for people that are basically unemployed. So what does that mean? That means that goods and services and basic products will increase because of the higher demand, which means potatoes will go up, onions will go up. Those are the things that basically hurt the households. So whether it seems that you pay less for your mortgage or for your car, the other things goes actually up, which is actually basic goods and services, because of the high demand. So you are not benefiting, basically, what I can calculate if I look at the inflation number. With the low interest rates, that doesn't mean you benefit, because if you look at your household, you have only two repayments in normal circumstances. You have two repayments, which is your mortgage, maybe your Edgar's account, if Edgar still exists, but you have your mortgage and your car. Those are the two things that you pay off, and then also your credit card. On the other side, the vast majority of stuff, which is your basic stuff at your house, tomatoes, onions, meat, chicken, eggs, sugar, all of those things are increasing rapidly, double the prices. So that doesn't mean because the interest rate is low that you save money on the one side. It doesn't, because the bulk of the stuff of the household is actually increasing. So the low interest rates does not help the average household in South Africa, because other stuff increases, although it looks like you pay less for your car and your house. On the other side also, now that government is spending quite aggressively on the economy, that is now on social spending and also with unemployment benefits, and that leads to an increase in goods and services, which means services or like goods, for example, your bread and those type of things are increasing. Now, at the end, when inflation is starting now to get higher, or which it seems in South Africa is getting higher, that gives the Reserve Bank no choice but to raise the interest rates, because the inflation is too high. And then you're sitting with a catastrophe at the end of the day, because now he needs to lift up interest rates very sharply. And that means that now, because the interest rates that are raising very sharply, that means you have now a triple whammy. One, the bread prices and the tomato prices and all of those things are increasing. And on top of that, your bond is also increasing for your car and for your house. So did you actually benefit out of this low interest rates? The answer, you know precisely. Now, if I just go back to the chart again, just to show you on this one here, this is now between the South Africa's interest rates and then also South African inflation. Now, this happened the last time when they drilled down the interest rates, they drill it down, and then inflation started to rise rapidly. And what happens? When inflation started to rise, that is where they needed to raise the interest rates aggressively. And that happened where South Africa went into a recession. Excuse me. For quite some time now, South Africa's interest rates were fairly stable. And then it started to drop due to the pandemic. But now you see this ugly head is moving now up, which is inflation. So at some point, if inflation is getting higher or getting out of control, then it means the Reserve Bank needs to act again with aggression and then start to slam the brakes on interest rates by hiking it aggressively. On top of that, with your onions and tomatoes that is expensive, now you have to pay more for your car and your mortgages as well. So in the long term, it might look nice now because we're all on the illusion, low interest rates, yeah, everybody's happy. In the long run, it's just there to bite your butt at the end of the day. So please be careful what you wish for, and then you will not sit with this big problem. That is it from my side. I would like to hear your guys' comments afterwards about this podcast, but please don't forget to register your account at marcus.com, deposit with $250 and get my classes absolutely free. And also we will have this chat on how interest rates and inflation also work. That's it from my side. Have a lovely day. See you guys tomorrow at the same time. Bye-bye.